Hi traders. Trading is more about psychology rather than finding a trading system and trading it every day. So in this video, we're going to talk about the 5 major reasons traders lose money and how you can fix it. It always makes sense to trade a stock intraday which is already trending. You see, markets tend to do what they're already doing. So if you zone in on an uptrending stock, it's likely to continue that trend up. And if you zone into a stock which is falling down, it's likely to continue falling down. Look at this beautiful chart of Just Dial. It's nicely trending up and down. Lots of liquidity, lots of traders and news in the market. You see, for intraday traders, news and lots of people trading it is very, very important. That's what makes a stock trend. Now take a look at this stock of DHFL. It's barely moving. It's almost flat. These flat stocks usually have no news surrounding them. So stay away from stocks which are not moving and zone into the stocks which are. Now imagine you're driving a car at 100 kilometers an hour on a small broken road. That would make you a little uncomfortable, right? It's the same with stocks. You have to be less aggressive, and that is what's going to make you money in the long term. Trade in small quantities. The problem with trading with over-leveraged large quantities is that you might get scared and exit in a panic. You don't want to do that. Discipline is maintained when you trade in small, manageable quantities. Now, as soon as you put on an intraday position, you are supposed to place a stop loss. Now, I'm not saying write it down or put a mental stop loss. That's not allowed. You're supposed to place an actual hard stop in the market. Many traders think that when my level reaches, I will exit, but that never happens. Panic sets in, fear sets in, and worst case, hope sets in, where you keep holding your losing position. And that's what destroys your capital. So a very simple tip is to make sure you place your stop loss. So when that number is hit, you actually exit the market. Cut your losses is probably the most said adage amongst all major traders and is probably the most useful. Every trade you make must have a mental target in place, and this could be a day's target or maybe even a week's target. If you hit that target, you should walk away from your screen. Now, if you've been trading for a while, you probably know what is the maximum amount you've earned in a single day or a single week. If you come close to that number, it's best to walk out from the screen and call it a day. Because once you hit those profits, it's easy to give them back. Once you hit your targets, probably you should walk away from your screen and save those profits for another day. Do you remember the 2008 crash? No one expected it, but from peak to trough, that was almost a 50% fall. Now imagine you were trading during that time, you held on to a stock and the stock kept falling and you kept doubling your quantity, which means you kept buying as the market fell. It won't be far off, especially if you're trading options and futures, that a lot of your capital is completely wiped off because you are accumulating your losses more and more. The final tip is probably the most important. Do not average your losers. If you hit your loss, exit. Do not buy again and try to bring the average point down. That does not help. So don't average losers at all. I hope these 5 tips helped. They're very basic, can be practiced, and will always help you to become a successful trader.